Hello and welcome to the trade setup. Today we are looking at a stock request, UEC, and in this video I want to present overall the larger time frame risk or potential rather, and the short time frame opportunities and risk zones. So from the get-go, in 2008, or nearly the get-go, we did start a 5-wave move up. 1, 2, 3, 4, 5. Very nice 5-wave move up. Very clear structure. And then we went to the downside in a 3-wave move, A, B, C, to complete the wave 2. And then we started a new uptrend, or rather resumed the existing uptrend of the 1-2 setup in the large third wave. And within this third wave, we do have two scenarios. The white one being the more directly bullish scenario, in which we completed a wave 1 up, a wave 2 down, and then another 1-2 within the third wave of the larger third wave. Then we have the yellow scenario, in which we only completed a wave 1 up here, and then we are now in the wave 2, which should take us into the yellow support zone between $2.60 down to around 70 cents. We are still mainly tracking the white scenario until we do actually reach the yellow scenario. It's just an idea of how this chart can still go quite low, so the risk of going low is quite decent, while okay, I needed to adjust actually this support zone for yellow, but yeah, it's $2.50 down to around 70 cents. But yeah, it's the idea that there's still high risk that we do go quite a bit lower before we resume into the higher uptrend. Now, still, we do have the white support zones and the more immediate opportunity for upside. And yeah, in that case, we do have here in the very short time frame a possible A, B, C that completed this wave 2, after which we started a wave 1 up, a wave 2 down, and then a possible another 1, 2 that should allow us to go directly higher. It could also be that this 1, 2 is not yet finished and we have an A, B, C here, but I also want to highlight the resistance zone that we have in red up to around $7.50, and the risk here is also that this could be a 1-2 setup that could take us to the downside to new lower lows and maybe still fit within the white support zone and actually find support here and just reset this wave 2. But it's also possible that we start a large C wave to the downside in 1, 2, 3, 4, 5. So until we actually break above the 78.6% retracement, the risk for a long C wave to the downside is still more prominent, but if we break above this, it becomes considerably less likely. So in this move to the upside here, we can track some sort of an ascending triangle that might be forming here, something like that. And usually these ascending triangles break to the upside, and it could be the case that we continue to wiggle up this trend line until we actually get to the top here and break above it. Now, while this is the possibility for more direct upside, and entering here is not necessarily the worst decision, just to keep the FOMO out of the way, entering a position here can help you manage that and allow you to feel that you can be a part of the uptrend without entering when we actually go even higher and get even higher risk and even worse risk-reward ratio. But do not worry too much if the triangle doesn't work out, if the ascending triangle doesn't work out. It's just an idea to track. We do still have a support zone that we can track for this 1-2, 1-2 setup with the mention that you need to be careful with the position, because this could be an A, B, C and complete a wave 2 in red here and go lower, or not even necessarily a wave 2, but this could be a larger here, a larger A, B, C and still take us lower. So you have the levels, you just need to be careful with the position size in this case, on this chart especially. And this is the trade setup. I hope you found it useful, and if you enjoyed the video, don't forget to subscribe and let me know what else you want me to cover, and I hope to see you in the next video. Bye bye.